Over the last few months, we've seen 3 of the 4 largest bank failures in the United States history, and this has caused quite a bit of panic in the banking community. And as a result of this, some of the largest banks in the United States saw serious declines in the month of March. We can see JP Morgan was down about 8.6%, Bank of America over 16%, Wells Fargo nearly 20%, Citigroup around 9%, Goldman Sachs 5.5%, and Morgan Stanley 8.7%. Yet despite this, many of these same banks recently announced dividend increases after clearing the Federal Reserve stress test. Dividend payout increases play a major role in getting the snowball effect to take place, so in this video we will be looking at 5 bank stocks that just recently increased their dividend payouts. The first bank stock that just increased dividends is one that I own in my personal dividend portfolio, and that is JP Morgan. They just announced that they are increasing their dividend payouts by 5%, and they're also continuing to buy back shares, as we can see from this article. So a 5% dividend increase, I typically like to see it a little bit higher, but it's not necessarily bad for a bank stock, but we also need to look at it in the context of their other dividend increases. So let's go ahead and jump over to Seeking Alpha, which by the way, you can get a 14-day free trial to at my link in the description. We can see they're currently trading at $146.61 per share, which is actually pretty close to their 52-week high. So this company's done really well over the past year. We can see year to date up around 8.5%, and over the past year, up 30%. Now, I originally added this company to my portfolio when it was trading around $110 per share, so I've seen pretty nice gains during that time. At this moment, it currently has a dividend yield sitting at 2.75%. But let's go ahead and jump over to dividends and look at dividend yield. If we scroll down here on Seeking Alpha, let's look at this yield on cost. At the point I bought in, you can see the dividend yield was sitting closer to around 3.6%. So it has fluctuated a little bit, but it's down currently because the share price has jumped up so much. If we scroll up and go over to the dividend history tab, we can see pretty steady dividend increases over the past decade. In 2013, they were paying out around 30 cents per share every single quarter. Jump forward to now, the most recent dividend payout was $1, but because of this most recent dividend increase, it's going to be $1.05. Let's go ahead and look at those dividend growth rates, and we can see the 5 and the 10-year dividend growth rates for JP Morgan, both really solid. They have 13% for their 5-year dividend CAGR and over 16% for their 10-year, so both really good. You can see the past 3 years have been lagging just a little bit, and their most recent dividend increase is pretty much in line with this with around 5%. But let's go ahead and jump over to my stock valuation spreadsheet, which I use to analyze bank stocks. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. But let's go ahead and come up here and plug in JP Morgan and hit enter, and again, you'll see all of this data will automatically load in. Now, we're currently looking at a 750-day change, so while it is at its pretty much 52-week high, it's still not anywhere close to its all-time high, as we can see from this 2-year chart. If we come over here, we can see their dividend payout. It's going to be 5% higher after this most recent dividend increase, but we can see the payout ratio currently sitting at a nice low 29.5%. That's a very healthy range for a bank's payout ratio. If we come down here, we can see analysts currently have a target price of $160 per share and a beta of 1.1, so you'll see a little more volatility than that of the market. But for this scenario, we're only going to be looking at the dividend discount model in this video, so I'll go ahead and zoom in. But this is basically a way to value a company based on how much they pay out in dividends and how much that dividend is increasing over time. So I've plugged in the quarterly dividend payouts for JP Morgan so we can see how much they pay out each year. And for the most part, their dividend increases have been decent. We have 12.5. They didn't increase it during 2020, but then we had 11.1, and the most recent dividend increase 5%. So that's an average growth rate of around 7.15% over the last few years. That's not bad at all. Moving forward, I'm projecting a dividend growth rate of 5.75%. and a discount rate of 8.5%, which gives us a dividend discount model price per share of $161.51, which is actually very close to what we saw for our analyst target price. That's pretty interesting. What's even more interesting is even at its 52-week high, according to our dividend discount model, it looks like it may still be slightly undervalued. So there's our first bank stock. The second bank stock that we're looking at just announced a very nice dividend increase, and that is Goldman Sachs. They just announced a 10% dividend increase to their dividend payouts. If we jump back over to Seeking Alpha, we can see the company is currently trading at $326.61 per share. And again, over the past year, done pretty well, up almost 10%, but they're actually still off pretty far from their 52-week high. If we look at them year to date, again, they're down about 5.6%. And like most of the bank stocks we looked at earlier, they took a big dip in the month of March. Now, they have a pretty decent starting dividend yield, starting at about 3.1%. We jump over and look at that dividend history. Again, this is another example of a bank stock that has steadily increased the amount they pay in dividends over the past decade, and they've really seen some rapid dividend increases over the past past 5 years, with the exception of 2020. If we scroll up and go to the dividend growth tab, you'll see some phenomenal dividend growth rates for this company. The 3-year dividend growth rate sitting at 26%, 5-year 26.8%, and the 10-year sitting at 17.7%. For a bank stock, that is absolutely phenomenal dividend growth, and for really any stock for that matter. If we jump over to our bank valuation spreadsheet, we'll come up here and plug in Goldman Sachs and hit enter. And one of the things that I want to point out is we've already talked about the dividend and the dividend yield, but again, the payout ratio sitting at 33.3%, that's a very healthy range for a bank stock, and again, they're still off pretty far from their all-time highs. We can see analysts currently have a target price of $382 per share, institutional ownership around 71%, but they have a very high beta sitting at 1.41, so you will see a lot of volatility with this stock, so that is something you need to be aware of. But if we jump over to our dividend discount model, again, you can see here I've plugged in the quarterly dividend payouts. Here's the most recent dividend increase. It will now be $2.75, so we can see our yearly dividend payouts. So again, no dividend increase in 2020, but then we saw a massive dividend increase after that, 25% dividend increase, and the most recent at 10%. So overall, that's an average growth rate over the past few years of about 23.75%. So a very high dividend growth rate. Moving forward, I'm projecting a dividend growth rate of around 5%, discount rate of 8.5%, which gives us a dividend discount model price per share of $330, pretty much right at their current trading price. Now, I know over the past few years, their dividend growth rate has been quite a bit higher than just 5%, but eventually I think things will level out, and this will be a pretty common average growth rate for this company. The third bank stock we're going to be looking at increased its dividends by the highest amount out of all the banks we're looking at today, and that is Wells Fargo. And while it doesn't list it off in the headlines, we can see right here, the company plans to increase its Q3 2023 dividend to 35 cents a share from 30 cents a share. And again, while it's not listed, that's an increase of 16.67%. So a very nice dividend increase from the company. We can see they're currently trading at $43.43. Over the past year, they've done decent. They're up around 9%. Year to date, they're up about 4%. But here's the problem. Over the past 5 years, they're down 21.89%. We can see the company has a starting dividend yield sitting pretty decent at 2.81%. But unfortunately, we have a major red flag with this company. And if we look at the dividend history and scroll down, we can see there was a major dividend cut to this company during 2020. It went from 51 cents per share all the way down to 10 cents per share. So while they have increased dividends by a decent amount over the past few years, there was a major dividend pay cut during that time period. Now, why was this? Well, if we jump over to the dividend safety tab and scroll down, you can see we have a chart showing our payout ratio over the last 5 years. During 2020, that payout ratio got dangerously high, so the company did have to cut its dividend, but now the payout ratio is sitting at a pretty healthy range, sitting at around 25%. If we jump over to our bank valuation spreadsheet, we'll go ahead and plug in WFC, the stock ticker, and hit enter. And again, you'll see all of this data will load in. Again, they're still pretty far off from that 2-year high, as you can see right here, but analysts currently have a target price of $48.83, and they have a beta of 1.12, so you will see a little more volatility than that of the market. But if we jump over to our dividend discount model, again, you can see I plugged in the quarterly dividend payouts. Here's our most recent dividend increase at 16.67%. Now, if we look at just the past few years, we can see an average growth rate of about 21.57%. But these dividend increases have been all over the place. Obviously, we had the dividend cut that was over 80%. Then the dividend payout doubled. Then we had a 50% increase, and the most recent sitting at 16.67. So it looks like they are trying to get that dividend payout closer to where it was before they cut it, but they still have a little ways to go. But moving forward, I'm projecting a dividend growth rate of 4.5%, discount rate of 8.5, and that gives them a dividend discount model price per share of $36.58. So while I do think the company has a good chance to continue increasing dividends for a while, it is always important to remember when a company cuts its dividend because it shows you where their priorities are. While it was probably the right move due to the payout ratio being very high, ideally I wouldn't like to see any of my companies at risk of cutting their dividends. The fourth bank that we're looking at has the highest starting dividend yield out of all the banks we're looking at today, and that is Citi, stock ticker C, and they just announced a 4% dividend boost. So if we jump over to Seeking Alpha, like I mentioned, really nice starting dividend yield sitting at 4.43%. If we look at over the past year, they've traded pretty flat, and year to date, they are up slightly at 2.10%. Now they're still down a little bit from their 52-week high of $54.56. Now what's interesting about this company is if we look at this dividend history, we can see this 4% dividend increase is the first dividend increase they've had since 2019. So this is a little bit of a big deal for them. Nice starting dividend yield with a decent dividend increase. Let's go ahead and jump over to my bank valuation spreadsheet. We'll plug in the stock ticker C and hit enter, and again the data will load in. If we come over here, we can see that dividend payout currently showing $2.04. That's about to get a 4% increase, but again, nice starting dividend yield at 4.36%. And once again, another example of a company of a really nice payout ratio sitting at 28.3%. Now, unlike Wells Fargo, we can see during 2020, their payout ratio really didn't spike up too high. It only got up to around 41.89%. And to me, that's a great sign. That's definitely something I like to see, but you do have to keep in mind they didn't increase dividends any for about a 3-year period. So if we jump over to our dividend discount model, like we've been doing the whole time, I plugged in the quarterly dividends right here, and we can see our year-over-year dividend growth rates. We have 13.3, a couple of years with no dividend growth, and then the most recent dividend increase right at 4%. So that's an average growth rate of about 4.31%. I'm staying pretty close with that, projecting a 4% dividend growth rate moving forward, 8.5% discount rate, and that gives them a dividend discount model price per share of $49 even. Again, very close to that current trading price. The last bank stock that we're going to be looking at is one that increased its dividends by 9.7%, and that is Morgan Stanley. They also announced a major multi-year stock buyback program. So all of that is good news. Now, when I was reviewing this company, there's a couple of things that I saw that I really liked, but also something that concerned me. I'll go ahead and point out the good, but first you can see over the past year, they've done pretty well. They're up about 13.5%, and year to date, they've traded pretty flat, up around 0.8%. Now let me go ahead and point out the good. We can see again, a bank with a very nice starting dividend yield sitting at 3.63%. Now if we go over and look at the dividend growth rates, we can see it's been really good for 3, 5, and 10 years. They have 30%, 25%, 31.5%. So that's two major green check marks. A really nice starting dividend yield with really nice dividend growth over the past decade. Now, what's the problem? Well, if we jump over to dividend safety and scroll all the way down, we can see that their payout ratio ever since March of 2021 has been trending upward. In March, it was around 18%. Jump forward to now, it's all the way up to 50.72%. So while the dividend is not currently at risk, with the payout ratio currently being at around 50% and increasing, that will eventually hinder the company's ability to continue to increase the amount it pays in dividends and hinder the ability for the company to grow overall. And if we jump over to dividend history, we can see why that dividend payout ratio increased by so much. The dividend payouts in 2021 doubled. It went from 35 cents a share to 70 cents per share. So that caused a huge spike in the payout ratio. And the most recent dividend increase will put them at about 85 cents per share quarterly. So let's go ahead and jump over to our bank valuation spreadsheet. We'll come up here. Let's go ahead and plug in MS and hit enter. And like we've already mentioned, nice starting dividend yield, a little bit of a higher payout ratio than I typically like to see. Analysts currently have a target price of $95.82, and the beta is a little bit higher than I typically like it. Some people like high betas, but it's sitting at 1.33, so you will see a lot of volatility with this company. If we jump over to our dividend discount model, I'll go ahead and zoom in. You can see where the dividend payment doubled right here, but before that, they actually didn't even increase their dividends any. But since then, we've had a 10.7% dividend increase and a 9.68% dividend increase. So yes, average growth rate is 30%, but you can see those dividend growth rates have been all over the place. So moving forward, I'm projecting a dividend growth rate of 4.75%. I think that's much more sustainable for the company. With a discount rate of 8.5%, we come to a dividend discount model price per share of $94.97. So with this company, yes, they have a very nice starting dividend yield and a good history of dividend growth, which are two things that I definitely like to see. You do definitely want to keep an eye on that payout ratio. If it continues to climb, that's definitely a little bit of a red flag. But there you go. Those are 5 bank stocks that just recently announced dividend increases. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. Seeking Alpha will also give you a 14-day free trial at my link in the description, so be sure to check that out. But with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.